Hi there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka along with me, Snehi. Snehi, another day of sell-off in Indian markets.
Absolutely.
Looks like. This is the reaction. Every time we open and we aim for a better and a bright day, but then the sell-off, which of course we opened with the downward pressure, gap down what we saw on Nifty, Bank Nifty both, and the downward pressure just took over throughout the day. Nifty have closed near 23,300 with the Bank Nifty. Bank saw the deeper cuts coming in, but then yes, there was a recovery also. But if you see the PSU Bank, that's the top sectoral loser today, down by more than 2.5% and majorly dragged by public sector banks like PNB, Bank of Baroda, SBI, IndusInd Bank. Bad day, all sectoral indices closed in green, barring reality and IT. Reality also recovered by half past the day, and that's what we saw, recovery coming in from few of the stocks coming in from broader market, and that's what took the indices higher. But then two top losers on Nifty, majorly the stocks from, you talk about Nifty, large caps, or you talk about broader markets. The top losers come from Adani Pack today. Stocks like other than Adani Pack, on Nifty we had SBI, NTPC, ONGC, ITC. They were the stocks which were dragging the index down. On the flip side, gaining side, we had Power Grid, Ultratech, Grasim and Hindalco. So some respite coming in from metal stock. Some of the cement names, they were buzzing in trades today. But the broader market also, we saw the similar kind of move. Adani stocks were the biggest loser on the broader market. Also on the flip side, we have Indian Hotels, which has been on a move from quite some time now. Prestige, Fortis, Nalco, and of course a few of the brokerage notes that have impacted the stocks like Paytm. Paytm was 4% up today. That was majorly on the Bernstein note again, talking about the bull versus the bear case scenario. But then of course Adani Group, they did give a clarification on that. They called the bribery charge baseless. But then, yes, what we saw was no stopping on Adani stocks, at least for today. Other than that, we saw a lot of action on the metal stocks, despite that US the dollar index is on a surge. It is crossing 106.5 also now. The fresh level which has come is 106.70. But then some of the stocks where we saw move was on metal stocks today.
Absolutely. In fact, even though the markets were subdued today, lots was happening nonetheless, because like Priyanka mentioned, you have all the sectors, barring realty and IT, that have ended the day in the red. But other than that, one sector that merits a special mention today is Nifty Bank, because even though it has ended the day with cuts of almost 0.3% in the red, it has been a recovery of 1.2% from the lowest point of the day. If you see, Nifty Bank has also ended at almost the highest point of the trading day. So very good move coming in for Nifty Bank. Nonetheless, cuts of 0.5% coming in on Nifty Bank as well. But if you take a look at some other newsmakers today, Vedanta was in focus on the back of the cancellation of their bond plan, and other than that also they've partnered with Gale Gas for cleaner energy. So that's something that was keeping the stock in focus today. Other than that, one asset class, if you can call it that, to talk about today is Bitcoin, because Bitcoin has done phenomenally well, close around that 97,500 level for now. It's been eyeing that 100,000 level over Trump's crypto plans, especially with everything that's been happening with Elon Musk and Dogecoin. Seems to be a pretty good time for crypto, especially the run-up that we've seen after Trump was elected. And lastly, we also have a source-based story coming in for you. We'll be bringing you more details on this later in the show as well. The government has mulled rate cuts on insurance premiums, and this could be a big move for insurance companies and people who want to subscribe to insurance as well. We'll be bringing you more details later. But before we do that, let me get on board Kunal Bothra now to understand what the market dynamics have been so far. And Kunal, if you recall, before the holiday and before the last half an hour of trade, when we saw that Ukraine news coming in, the market was holding up pretty well, and it was making investors happy. We had a good rally coming in on that day, but seems to have reversed. You have a lot of pressures that are coming into play, and the market has taken a beating today as well. How long does this continue going ahead? Because it seems like the FIIs are not, while they are reducing what they are selling, it doesn't seem like they're changing their pattern anytime soon. So other than that factor, what do you think is ailing the market so much right now, and when can we expect some type of recovery?
Yeah, I think a lot of news flow for the markets, and a weaker market doesn't require too much of push to try and get back into more weakness, because that's what we've seen over the last 7 weeks, or this is the 8th week in fact, where we've seen the Nifty correcting and falling very sharply. One of the prime reasons for that, of course, is the dollar index, which has moved from 100 to 107 odd mark, and I think now it's threatening to go above a major support, major resistance point or breakout point, which is closer to that 107 levels. So my sense is that maybe over the next 2 or 3 weeks, we may see some bit of resilience and some bit of comeback in terms of consolidation coming back into our markets. But I believe that what matters over here is the if the index holds on to that 23,000 mark as a strong pivot support over the near term. So if we break below that 23,000 mark, say over the next 1 or 2 weeks, then I would believe that we could be in for much more sharper correction. If that happens on the back of two important data points, one is if the dollar index managed to rise back above the 107 mark, as well as if the India VIX, which is still at 16 odd levels so far, if we manage to see a breakout above 18 odd mark, we could be looking at the fall getting a lot more aggravated. So it's still time that we may probably expect the index to consolidate for the next 1 or 2 weeks, but that may not change the trend or the trajectory for the index unless these two important key data points which I highlighted, I think if they start to recede.
Okay, Kunal, these are some real worrisome words coming in from you also, because the way we've seen, we're already on an oversold zone. We thought that there could be some respite coming in, but then we'll have to look at from this perspective. It's not just the price-wise correction, it could be a time-wise correction also. And you said that the fall could aggregate from here. So where do the margin of safety lies? Will that be IT stocks or pharma stocks? Where would you recommend some trade for our viewers?
Yeah, it's difficult to recommend sectors, and especially hiding sectors, because in this kind of a market, everything generally takes a beating, whether it's the stronger stocks or the weaker stocks. The weaker, of course, the ones gets a lot more weakness, and the weakness it gets a lot more pronounced into those kind of counters. But two stocks which I want to highlight, and the ones which have been a lot more resilient and still being very sturdy and strong. One of them is Power Grid. So far, the stock is holding on pretty well for itself. It's bounced off from its 200 moving average, just about that 316 to 320 range. So would look out for targets in the range of 334, stop loss to be kept at 316. And the second would be a bond Master Seamless. Even this stock is an interesting play. The stock has over the last 2 or 3 months been a lot more sideways, closer to 620 odd mark. It's nearing a breakout point where it could retest the previous resistance of 650 mark. So would look out for targets in the range of 650, stop us at 610.
Power Grid and Mihir Seamless, 2 buy calls coming in from Kunal. Kunal, thanks so much for sharing your view as well, your stock picks with our viewers. On that note, we'll let you go. But time to slip into the word from the wise segment then. And today that is Mihir Vora, CIO at Trust Mutual Fund. He believes banks will outperform in the current upcycle. He also believes that the beneficiaries of financialization to outperform the financial. That's an interesting take coming in. Let's go across and listen to his rationale.
So in a upcycle like this, banks in general will outperform for sure. But I don't think we have the kind of large banks now which are going to give you 25% CAGR going forward. For that, you probably need to look into the non-lenders or even some of the NBFCs which are relatively smaller in size, which are more nimble, so to say. So I think it's time that we start looking at lenders as a proxy to the economy plus something. And the non-lenders, basically all the segments which are probably catering to the savings pool, which is expanding rapidly. So whether we are talking about wealth management, broking, asset management, insurance, capital market, depository participants, R&D agents, etc. That whole ecosystem, which basically caters to the rising savings pool, rising affluence, rising capital market exposure of HNIs and retail investors, that probably will outperform the financials, the lending financials.
Okay, so Mihir Vora likes clearly banks and financial space. Moving on to an ET Now exclusive. M&M is on track to meet EV adoption targets ahead of the 2030 deadline. Now let's go across and listen in to what else Anisha, who's the group CEO and MD, has to say on that, about company's EV growth roadmap.
We had outlined 4 goals at the start of the year: Make in India, women-led development, farm prosperity, and sustainability. And I must say that the FICCI team has just done an outstanding job. Really thrilled to see the level of progress, because there are very specific actions outlined for each one that we've achieved this year, and we've got targets for a 3-year period. So for manufacturing, we're looking at getting India from 3.1% of global manufacturing share to 5%. For farm prosperity, we're looking at 8 lakh crores of agri exports, which is a pretty ambitious target in itself. For sustainability, 30% in EVs for 4-wheelers, 80% penetration for electric 3-wheelers, and a 17% reduction in industrial emissions. And for women-led development, a 5% point increase in penetration, as well as skilling 40 lakh women in the next 3 years. And a series of activities have been outlined. There are 100 plus initiatives with inputs from 500 CEOs across member companies and working closely with 30 plus ministries. So there just has been a lot of effort that's gone in, and more importantly, these are efforts that will lead to specific outcomes.
So I wanted to also talk to you specifically about the manufacturing footprint, and of course, the Prime Minister has spoken over and over again on the need to make India a big manufacturing powerhouse, not just built for India but for the world as well. What more needs to be done from an industry, from a policy perspective, to sort of reach that 5% goal that you were talking about?
There are three specific things. First is quality. That is important, and there are a number of initiatives around innovation, R&D, and therefore leading to higher quality. Second is cost of doing business, and third is ease of business. So it's a combination of these things that will allow India to start becoming the manufacturing hub of the world.
One final question. So you had a target of 30% electrification by 2030. Is that target on track? Could you give us a sense of that?
Well, from a Mahindra standpoint, I think that target will be met before then. We are launching our electric vehicles next week, in fact, as you know. And I will wait for the products to speak for themselves once they're launched.
Okay, that's the word coming in from the M&M Group CEO and MD Anisha. But on that note, we'll slip into a very short break, and when we return, we'll take a look at the important derivative levels to watch out for going ahead into this week as well. So you stay tuned.
Welcome back. You're watching Your Trades on ET Now. Now let's get you a FNO roundup. What happened today from the derivative side? Of course, the trend has again changed. What appeared from Tuesday's queue, wherein there seemed to be a room because 23,800 calls were the most active calls which were written off by the traders. There appeared to be a room, but the trend completely changed today again. Now Nifty, there was a short built-up trend on Nifty. Bank Nifty, there was a complete long unwinding. Though banks recovered later half of the day, but initially there was a more pressure. The bigger drag was coming in from banks only. But now for trend for Nifty is short built-up. Bank Nifty is long unwinding. The active calls which were written off today were 23,400, 23,500, and there's a put buying for the lower strikes like 23,200, 23,300. India VIX seem to be at 16, nearly 1.5% up. So trend is changing every day, Mihir. Very difficult to gauge into this.
Absolutely, there's so much uncertainty with what we are seeing in the markets. They're opening in one direction, going in the other. We can just hope for some kind of
800 points on the Bank Nifty today. The way
absolutely, yeah, so much volatility coming in on an index like Bank Nifty. You just can't, gauge any levels to watch out for on that front. But on that note, let's also talk about the big story of the day. And no doubt that has to be the Adani Group stocks, because they were under pressure after the US Department of Justice indictment that came in. Adani Green also withdrew its proposed dollar bond issue, and the group also clarified that they are compliant with all the laws and will take all legal recourse available. My colleague Varun is joining us with all the finer details about everything that's happened and why the group stocks have taken such a beating in today's trade. Varun.
Well, so Gautam Adani and 7 others have been found guilty in US in multi-billion-dollar bribery and fraud schemes. Now, Gautam Adani, Sagar Adani and Mr. Jain, they were charged with securities fraud, conspiracy, and the 4 others, they were charged with conspiring to obstruct justice. Now, the allegations were that more than $250 million of bribe have been paid to Indian officials to secure solar energy contracts between 2020 and 2024. And these solar energy contracts were expected to earn profits of more than $2 billion in coming next 20 years. The bribe was given to obtain funds from US investors and also global financial institutions on the basis of false and misleading statements. Now, these charges, they actually fall under the Foreign Corrupt Practice Act in US, which is a law against bribery in foreign business dealings. On this, Adani Group says that these allegations are actually baseless and they are fully compliant with the laws, although they have decided not to proceed with the proposed $600 million US dollar bond offering. Also, Solar Energy Corp India head says that there is no basis to investigate the matter and they have not received any documents over the charges from US. On this, Moody's also say that this case actually can be credit negative for the company, and because of all this, you have seen in today's trade, Adani Group stocks were beaten down.
All right. Thanks very much, Varun, for the complete detail on this matter. But moving on, Aegis Logistics is was in focus today after its subsidiary Aegis Vopak Terminals filed DRHP for the upcoming IPO. My colleague Jine joins in with more details on the upcoming IPO. Jine?
Well, definitely Aegis Logistics will be in focus as company subsidiary Aegis Vopak Terminals have filed an DRHP for its IPO. It comprises of a fresh issue aggregating to up to 3,500 crores. If you look more about Aegis Vopak Terminals, then it is a joint venture between Aegis Logistics and Vopak India BV, which is a part of the Vopak Group, and the Aegis Logistics part holds about 50.1% in this JV. Also, AVTL, which is Avic Vopak Terminal, is India's largest third-party operator and owner of tank storage terminals of LPG as well as liquid products in terms of the total storage capacity. If you look at the further financials of the company in FY24, the revenue stood about 562 crores, which is about 8% revenues of Aegis Logistics, and the net profit after tax stood about 86.5 crores in FY24. Also, if we look at the objects of the issue for the IPO, it will be utilizing about 2027 crores for paying off its existing debt. It will be utilizing about 671 crores for funding its capex towards a certain LPG terminal in Mangalore and using the rest of the funds for general corporate purposes. We also have a note by Motilal Oswal on Aegis Logistics. They have maintained their neutral stance with a target price of rupees 795. Now the management has reiterated its PET guidance of 25% for coming 3 years, also which will be led by mainly by the robust capacity additions for the company. Well, Motilal believes that the current valuations already factor in the capacity expansion as well as the earnings expansion growth for the company. However, they do see this listing of AVTL as a near-term trigger for Aegis Logistics.
Thanks so much for that. Aegis Logistics is a stock that took a beating in today's trade. But on that note, we've spoken about a few stocks today. But let me also take it across to my colleague Gaurav, who's standing by with yet another basket of stocks that were in focus today on the back of their individual news flows. Gaurav, hi, take it away.
Yes, let's begin our list today with Godrej Properties because company has acquired around 53 acres of land in Calcutta, and they say that the potential sales value for this land is going to be around 500 crore rupees. As a result, we saw some uptick in this counter. Next, let's talk about Britannia because this company has got FSSAI notice over the product compliance. What they're saying is that they have used preservatives more than what it was actually given in a limit of FSSAI, and that is the reason why they have asked the company to not sell one of the batches of one of the products, and that is the reason why we saw some pressure in this counter. Next, let's talk about Dr. Reddy's because US FDA recently conducted its inspection in one of the manufacturing facilities in Hyderabad, and they have come up with Form 483 and 7 observation, and as a result, we saw some negative sentiment in this stock. Next, let's talk about UPL because this company is going to sell around 8.9% stake in the company Advanta to PE firm Alpha Wave for $250 million. Now, UPL will still hold more than 74% stake in the company, and this deal, when we look at the valuation, it is still higher than the valuation that we are seeing for UPL at around 8 times price to equity, and that is the reason why we saw some positive uptick in this counter. Lastly, let's also focus on Coforge because Morgan Stanley has now maintained its overweight rating and a target price of 8,800 rupees. What they're saying is that the company is very positive that they can actually deliver the margins that they have promised in the next 12 to 18 months, and the margins are likely to remain range bound. And at the same time, what they also believe is that management has said Signite will reach a margin level of around 18%, and that is the reason we saw some uptick in this counter as well. So definitely watching out all these companies on the back of the news flow as well as brokerage note that we have received today.
All right, thanks very much, Gaurav, for all those stocks that were buzzing in trade today. And moving on to an ET Now exclusive, government is likely to discuss rate cuts on insurance premiums in its GST Council meeting, which is scheduled in December month this year. Anurag Shah is here with some exclusive details on it. Anurag, over to you.
So in last two GST Council meeting, GST rates on insurance premium were expected to be discussed, but it did not happen. And in upcoming GST Council meeting of December, what we are given to understand that GST relief likely to be given, and there is a connection between GST Council relief to on GST rates on insurance premium and Insurance Act amendment, because government is planning to bring Insurance Act amendment in winter session of the parliament, and as per our sources, government want that GST relief on insurance premium should be done before the bill is tabled in the parliament. So most likely in GST Council meeting in month of December, which is happening in Jaisalmer, Rajasthan, GST relief on insurance premium is likely to be given. Group of ministers, GOM, has also recommended GST relief on term insurance premium and zero GST on premium paid by senior citizen, and the insurance coverage of the policy sum assured coverage of 5 lakh. These are the recommendations by GOM. And if we see that overall the health insurance premium data also, which also suggests, which also support the GST relief, because we have seen that starting from the cabinet minister Nitin Gadkari to several opposition parties are also asking for the GST cut, because the 18% GST on insurance premium is too high, and the insurance penetration is also getting hampered, because as per the global average, insurance premium, non-life insurance penetration is just 1% as compared to the global average of 4%, and the government has also target, IRD regulator has also target for insurance for all. To achieve the insurance for all, insurance penetration need to be increased and GST rate to be reduced. And now government also planning to bring the Insurance Act amendment, which is the biggest reform in insurance sector. So there is a complete sync and connection that first GST rates will be reduced, and later on followed by GST rate reduction, government will bring Insurance Act amendment bill in the winter session of parliament.
Okay, Anurag, thanks so much for that. But with that, it's a wrap on this edition of Your Trades. Thanks so much for watching.